Aloha. Welcome to Abe Lee Seminars sessions. Today, we're going to talk about the mortgage document. That's a document that the borrower signs, pledging the property as collateral to a bank, and the bank will loan the money to the borrower. So it's a written instrument, written usually by an attorney that represents the bank. And the borrower will then sign this mortgage document. And the document will then be recorded at the Bureau of Conveyance, which we'll talk about in a minute. So it's a written instrument because in Hawaii, as in most states, the law of statute of fraud says that most legal documents need to be in writing and signed by the parties that are responsible for making sure that the contents of the documents are carried out. So it has to be written, and it has to be by what they call competent parties. A competent party, usually the borrower, needs to be sober, not drunk, not under the influence of alcohol or drugs. They cannot have a gun to their head saying you will sign this document. And they have to be mentally competent of legal age and legal mind. So legal age in Hawaii, 18 years old. If you're 16 or 17, you cannot sign a document or contract. Third, you need to have what they call a description of the property. Now, there's a legal description which gives you the exact location of the property as defined by a surveyor or engineer. Most of us don't know how to read that legal description because it talks about grids and azimuths and longitude and latitudes. But the non-official description of a property would be an address or a tax map key, which is much more beneficial to the consumer. But in a legal document, you have to have a legal description that's usually created by the engineer or the surveyor that does field notes out in the field. Then they bring it back into the office, write up the legal description, and the attorney will draft up the document for everyone to sign. So that's called a legal description. You also have to have what they call a statement of the debt and the terms by which the obligation is to be repaid. So that's where the legalese comes in, where you specify how much is the loan, what's the payments, how long is it for, and if they default, what's the right of jurisdiction by the lender to foreclose on the property. And 5, you need to have an estate that can actually be mortgaged. Well, what do you mean by that? If the property does not have clear title, if there's a break in the chain of title and the title company says, this title is broken, something happened, and we cannot trace it back to King Kamehameha III, that means that you have a title that cannot be mortgaged. Then you have provisions for foreclosure. Heaven forbid that the borrower is going to be foreclosed on. And we do have that from time to time because life happens. So if the borrower says, hey, I'm getting a divorce and I'm losing half the income because my spouse is going, or I'm sick, I'm dying of cancer, or I lost my job, or whatever it happens to be, so you can't make the payments, then the mortgage documents will clearly say there's 2 ways to foreclose on the property. One is called a judicial foreclosure process, and the other one is called a power of sale foreclosure process, which is non-judicial foreclosure process. As clearly stated in the bank document that says the lender has a right to go to a judicial foreclosure or a non-judicial foreclosure. You also have to have a signature of the mortgagor. Now, you remember the mortgagor is a borrower that's giving the mortgage to the bank. So in other words, it's the borrower that has to sign. Then you have to have what they call voluntary delivery and acceptance of that document. So let's say I'm the borrower and I signed this document. It was notarized and it's recorded. There has to be a delivery and acceptance of that mortgage document between the lender and the borrower so that the borrower knows that this document has been recorded at the Bureau as a legal binding document. So there needs to be an acknowledgement and notary recording, and then it has to be delivered and accepted. People ask, what's an acknowledgement and notary and recording? All the acknowledgement is that the borrower says, hey, notary, here's my ID, here's my passport, and I'm signing this document. And notary looks at my ID, make sure it's current and valid, and then they'll notarize a statement, and then it gets recorded at the Bureau of Conveyance. Now, the Bureau of Conveyance is the depository where all legal documents are recorded to give notice to the rest of the world that this document exists. You don't have to acknowledge it and have it notarized, and you don't have to have it recorded, but the lenders will insist on that document being recorded, because then it gives them what they call a secured position, so that if their property is ever sold, the lender is in first position to get the money back in case there has to be a foreclosure. Now, before you record, the lender does not have a secured position. But once you record it, then the world knows that the bank has first position of all the prior encumbrances or documents that are encumbering the property. And if you have 2 or 3 mortgages, then the first mortgage to record gets first position, then the second in second position, and third, and so forth. So the bank that makes the biggest loan needs to be in first position, or else they won't make the loan. If you have a smaller loan from your auntie or your parents or from a friend, that might be in second or third position as to when it's recorded, and they'll be in second or third secured position, but the banks will usually want to be in first secured position. There's a thing called government taxes, property taxes. So if you do not pay your real property tax, government real property tax payment liens are always in first position before the recorded mortgages. And if there's any government assessments, that's in second position. Then the recorded mortgages are in first position of a secured creditor. So the way the government has it set up is payment real property taxes and government assessments are always in first and second position, and then recorded mortgages are in first secured position as a lender. So hope this helps you to understand how the mortgage documents work and what's needed. Aloha.